But even during the summer of 2008, people were oblivious to the crisis, even though it was a huge crisis. I mean, not huge compared to what we're about to experience, but relative to what anybody had experienced up until 2008, there was nothing like it, right? You had to go back to the Great Depression. Now, what we're going through now is going to be worse than the Great Depression.
Peter Schiff, a renowned economist, reveals an alarming parallel between the current financial crisis and the 2008 recession. He emphasizes that the crisis is not a matter of if, but when, drawing comparisons to the obliviousness preceding the 2008 crash. Schiff highlights the blatant signs, particularly the mortgage market collapse in 2007, that were overlooked by Wall Street and the Federal Reserve. Despite the enormity of the impending crisis, Schiff warns that what lies ahead will surpass the Great Depression, making the previous economic challenges seem comparatively easy. His historic predictions, once viral on YouTube, serve as a chilling reminder of how major crises can unfold silently, much like a brewing storm off the coast, unnoticed until it wreaks havoc. To understand the full extent of his analysis and the critical details leading up to this revelation, stay tuned.
And another week where the financial crisis that has already begun continues to play out beneath the radar. Nobody understands that this crisis has started. But believe me, it has. I mean, this was the way the 2008 financial crisis started. It didn't just happen when Lehman Brothers went bankrupt. I mean, by that point, everybody knew that we had a crisis. But the crisis was obvious before Lehman went under. That's the reason it went under. It didn't just go out of business, out of the dark. It wasn't just, happenstance. The reason that Lehman Brothers and Bear Stearns and Fannie and Freddie and AIG and all these companies went under was their exposure to the mortgage market. That exposure was obvious to me for years, but particularly in 2007 when the subprime market blew up. That was the point where even the village idiot should have been able to figure out what was coming. The problem was most people on Wall Street weren't even smart enough to qualify as the village idiot, so they still couldn't figure it out. They needed that proverbial, anvil or piano, whatever, to fall on their head, which is what happened in September of 2008. But even during the summer of 2008, people were oblivious to the crisis, even though it was a huge crisis. I mean, not huge compared to what we're about to experience, but relative to what anybody had experienced up until 2008, there was nothing like it, right? You had to go back to the Great Depression. Now, what we're going through now is going to be worse than the Great Depression. So, they had it easy back then. I mean, this is going to be much more difficult. But as enormous as this problem was, and it erupted right in September of '08, Wall Street, the Federal Reserve, at least what they acknowledged, they were oblivious to this. So if you're wondering, Peter, how could we be so close to this massive crisis? In fact, how could this crisis have already started if nobody is talking about it? Well, just go back to the summer of 2008. Nobody was talking about it. Remember, I was saying it's like there's this, Category 5 hurricane right off the coast, and not a single weatherman has noticed it. Right? I was out there telling people, hey, the storm is coming, but nobody noticed it until, it was ravaging the town because, it finally made landfall. So if you want to know how it could happen, just go back. If you go to my website, the original Peter Schiff was right video, the guy that posted it took it down years ago. I don't know why he took it down, but he did. But I made a copy of it before he did. So I've got that original video, which had a couple of million views on it back in 2009, which isn't a lot of views by today's standards. But back then, YouTube was very young. It was very rare to have a video with 2 million views. I mean, I was one of the top videos on YouTube back then.
In this next discussion, Peter Schiff dives deep into the looming financial crisis, painting a grim picture of major banks like JP Morgan Chase, Morgan Stanley, and Goldman Sachs being on the brink of insolvency. Schiff discusses the irony of Jamie Dimon selling JP Morgan Chase stock, a move he hadn't made in his 20-year tenure, hinting at the severity of the situation. He highlights how the 2008 bank bailouts only worsened the problem, leading to these institutions becoming even larger and more vulnerable. Despite gold's strong performance, Schiff questions the puzzling pessimism among gold stock traders, suggesting an imminent explosive surge in gold prices.
So this is the year of the crisis, and they're still laughing at me for predicting it. Yet we were on the cusp of it. This one is much bigger. The problems are much bigger. They're the same problems. They just dwarf the size of the problems that we had before. Because instead of actually dealing with the problems, we kicked the can down the road and made the problems bigger. And now we have to deal with the consequences of that. You know, it's ironic. Jamie Dimon, I guess, came out today and he had to admit that he's going to sell some of his JP Morgan Chase stock. He owns over $1 billion worth of the stock, at least at today's market price. And so he's going to sell about 1 million shares, which at today's price is about $135 million. And this is the first time he's done that. I guess he's had the job for 20 years, and he's never sold any stock. Now, of course, he gets paid a lot of money to run JP Morgan Chase, so he doesn't need to sell the stock. And, you know, maybe he's borrowed some money. I'm sure that, you know, with interest rates at next to nothing, you know, when you run a bank, he probably borrowed some money against that stock. I don't know. I'm just, you know, just taking a shot that he borrowed some of that cheap money. Because he didn't want to sell the stock and pay capital gains taxes, just borrow the money and deduct the interest. So he probably did that. But now all of a sudden, he wants to sell stock. Now, the stock hit a 52-week low today. So did Morgan Stanley. Goldman Sachs hit a 52-week low. Actually, I don't know if JP Morgan Chase did. I know Morgan Stanley and Goldman Sachs hit 52-week lows. The stock was down today. The banks got hit pretty hard on the day. But JP Morgan Chase is got to be insolvent. There's no way that they're still solvent. All of these banks, Bank of America, Wells Fargo, they're insolvent. They have to be. There's no way they can't be. Now, as long as they pretend that all their underwater assets, they're going to hold them to maturity, well, they can pretend that they don't have a problem. But eventually they have to stop pretending because circumstances intervene and they actually need to sell the securities that they had intended to hold to maturity. If you recall, if you were following me back in the day, back in 2008, when a lot of people started following me, one of the many reasons that I was against the bailouts, the bank bailouts, the TARP program, was that I knew that if we bailed out these too big to fail banks, that the next time we had to bail them out, they would be even bigger. So if they're too big to fail then, let's let them fail. Because why keep them alive so that they can get a lot bigger so that when they fail in the future, it's even worse? Because if they were too big to fail in 2008, what are they now? Because all of those banks that we bailed out are much, much bigger now than they were then. And they're in much more trouble now than they are then. Than they were then. You know, and hardly anybody knows how big this crisis is. Look, not even the gold traders understand. The people that are buying gold stocks, you know, gold stocks finally managed an up day today. It wasn't like they were up a lot, but gold was up better than $20. It closed the week above 2,000, closed at 2,005. So this is the highest weekly close since May 5th. That was a while ago. But if you look at gold stocks would have to rise over 20%, maybe 22%, something like that, to get back to where they were on May 5th. So gold stocks have gone through an entire bear market, and the price of gold hasn't gone down at all. Why? Why are gold stock traders so pessimistic when the price of gold hasn't even gone down? And in fact, it's on the verge of an explosive move up.
So let's recap. Peter Schiff delivered a stark warning about an impending financial crisis, drawing parallels with the 2008 collapse. He emphasizes the obliviousness surrounding major banks' insolvency, pointing out how past bailouts only exacerbated the problem. Schiff also highlights Jamie Dimon's unprecedented stock sell-off as a sign of the severity. Despite gold's strong performance, he questions the pessimism among gold traders, hinting at an imminent surge. The enormity of this crisis surpasses previous challenges, yet few comprehend its magnitude. Now it's your turn. Share your thoughts below. Do you agree with Schiff's analysis? How do you think this crisis will unfold?